Good morning, everyone. I'd like to begin by welcoming members to the Pension Fund Investment Subcommittee meeting. County Council allows filming and photography at its public meetings, so please feel free to take pictures and use social media during the meeting. Can I ask, though, that everyone present turns their mobile phones to silent or vibrate whilst the meeting is taking place? Please note that there is no fire alarm test scheduled for today, so if the alarm sounds, I will adjourn the meeting and we'll make our way downstairs now to the main entrance. The nearest fire exit is through the main entrance doors. Okay, Dawn, do we have any apologies?
Apologies from Councillor MacDonald. We have Councillor Atkins substituting.
Thank you. Does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? Thank you. Right, item 2, we're being asked to approve the public minutes of the subcommittee meeting held on the 29th of February as an accurate record. Can I ask if any member who does not agree with this proposal to raise a hand now? Okay, I see no objections to the proposals, so we will take the minutes as approved unanimously. Moving on to the action log. Officers, any updates on the action log?
Thank you, Chair. I'll just whiz through them quickly. So currency hedging on there. There's a paper in this committee that we'll get onto that one. Timberland, it's been agreed that JP Morgan or the Global Campbell product and Stafford were the successful applicants through the tender done by Apex. So officers will be working with the chair and Mercer to finalise any allocations there. The social and affordable housing tender that was awarded to Elgin. Again, we'll have follow-up meetings with the chair, Mercer and officers to do the final allocation there. And then finally, the property portfolio review. We've now completed the final secondary purchase. So we've got our allocations as we wished for the Aviva Lime product, which is the long lease product.
Thank you for that, members. Any questions on that? No, we're being asked to note the action log. Are we happy to do so? Thank you. Right. Item 4, we've received no petitions or public questions. So item 5 is the stewardship and engagement update. Can I ask Ben Barlow, Funding and Investment Manager, to introduce this report, please?
Thank you, Chair. Yeah, it's one you know quite well now. We're now bringing this quarterly. It was 6 monthly, but obviously we've raised the profile of it for obvious reasons. So concentrate on the 3 areas that are in this. You've got the votes, you've got the engagements, then you've got what LAPF are doing across the LGPS. So of the votes, there's been 162 occasions to vote. 17 votes were not cast. 87 were for manager proposals. 58 were against. To categorise those, 3 were related to environment, 15 to social, and 144 to governance. There were no instances where the fund manager has overridden voting guidelines. On the engagements, there were 4 engagements. 1 was classified as environmental, 2 as social, 1 as governance. We were a little disappointed with some of the engagements or the lack of engagement from a couple of our managers. That has been escalated to the ASUs, the Access Support Unit, and they are looking into discussions to understand why engagement hasn't happened to the level that we would hope within the period. Few other parts within the report. There's a lot of detail on how the team is engaged with managers. So as a team, we meet not only with managers we currently invest with, but managers that are across the Access pool and the wider LGPS. And we sort of have regular conversations about what they do from an ESG point of view, what their stewardship processes are. So there's details in the paper there. There's also the LAPF engagements, and there's a few examples in there. I won't pick them out I'll let them sit within the report. I'm sure you've all read those and seen those. A new addition to the report is detail around the LAPF voting alerts. So the team is now, any voting alerts we get from LAPF, we progress on to managers and we collate responses. And as time goes on, you'll start to see more of the the feedback we're getting from managers within this report, and that's an area that we hadn't really brought through till the last sort of 6 months. So that's an additional area that we'll be bringing into the report, and you'll see more of. Other than that, that's quite a quick whistle stop, but happy to take any questions or comments.
Members, over to you. Any questions on the engagement? Adela?
I just wondered if you could tell me if it was possible who the 3 different companies were that had voting in their notes.
So I'll just bring up
those
the
3
paper with me.
different companies.
I can come back to you if you like. That's probably the best way. I'm not sure I can bring it up straight away.
No.
I think I heard you mention that there were 17 occasions where we didn't vote or no vote was made. I might have misheard that, but if that was the case, what was the reason we didn't put a vote in?
Yeah, those 17 votes were not cast. We respect our managers to understand the reasons behind voting or not voting. They're experts in the field. They understand these companies a lot better than we do. And sometimes the guidelines can be almost too much detail. So, for instance, they might want a auditor. The guidelines will say that there should not be a vote against an auditor continuing for more than 10 years. But if the manager knows that particular company and they're happy with that, they might decide that they'll go against the guidelines. And again, we respect them for knowing the companies and the market conditions better than we do. So in the same way that they might vote against, they might choose not to vote, and we respect that. And they give us details on why they've voted or not voted. And again, I can pull that detail out if it's needed.
Yeah, funnily enough, we were talking to a manager the other day about abstentions, and sometimes it's a very conscious decision to abstain because they're not, they want to make a point to the company, but not so strong that they vote against a manager proposal. So that was something we actually only discussed with the manager a couple of weeks ago.
Members, any other issues, Liz?
Fund holds. Am I on now? So we've received a list of investments from the Palestine Solidarity Campaign that the fund holds. And I wondered if we could have advice on what legitimate ethical policy decision we could make in relation to the companies. I guess, first of all, we'd have a look at whether the list is current, and advice on any policy decision that we could make in relation to the companies that profit from involvement in the occupation of illegally held Palestinian territories. So obviously it's a very live matter. It's very urgent with the, the war in Gaza and the huge number of deaths there. So it is a legitimate interest, I think, of our members.
Yeah, thanks. So Liz kindly emailed me yesterday with this. So we've done a bit of pre-work on it. We've gone out to managers already with the list of companies on the link, and we'll get an up-to-date holdings of where we are with that. The next question is whether we would need to get some sort of legal review to say what those holdings mean, and that unfortunately comes with a cost. So it would have to be a committee decision since it's been raised in committee if we're happy to do that. But as for getting the holdings together, we've already started that process.
Thank you. It'd be good to actually understand what the situation is. It's clearly an area where we have no idea what is going to happen in the near future. So it's, important that we understand things. Right. So thank you. Any other?
Yeah. I'm quite pleased to see the example of Starbucks on the engagement list here. And I think that does look like the sort of engagement we should be doing, and that I think, you know, the members of the pension scheme and our employees would be pleased to see us doing. And I see that's going through LAPFI for their whole, and you know, I wonder actually if they might be ahead of us in Access Pool and perhaps in this scheme in sort of getting an idea about ethical investments. I very much appreciate what Liz has brought to the table here. I mean, and I think possibly that was a country and investments that I might want to leave till last in some ways because it is so controversial. But I think it's right that we think about that now because of the situation where so many people are dying in Gaza, and where we perhaps need to have some sort of urgent influence. Now, we've got an election called, and of course, all these sort of investment decisions were going to be affected by a bill that's going through Parliament. And that bill I don't know what the situation is going to be with it now, because it's actually on its third reading in the House of Lords now. And I'm not sure if it's going to be rushed through before the election period, or whether it's possible to, because it hasn't had its report stage or any amendments for the House of Lords to go back to the Commons. And of course, it hasn't had the third reading, is not completed yet in the House of Lords. And that was essentially about stopping local authorities and local pension funds and so on trying to influence the human rights situation in Israel, or in particular disinvesting in Israel. But it was written in a sort of wide-ranging way that sort of said that any country, you know, so if there was suddenly we were in the situation of Rwanda before the genocide, I think we'd have been unable to take any action against Rwanda, for instance, because there was a genocide going on there. And that's the situation with that bill. I mean, I don't know if anybody knows whether it's possible for the government to actually rush this through, or whether that's now dead. But as well, it's quite interesting in the bill. It does give exceptions for how you can actually still pursue and engage with companies. I think that's in procurement terms, really, but for a lot of the things we've been talking about, like human rights and labour rights, it seems that providing you don't do a blanket thing on an entire country, it would still be legal. And yeah, I would like to see us pursue shareholder engagement, and where it's thought that it would be effective, it might be that we might want to disinvest in some companies. But certainly, you know, I think there's a lot of work to do on this. But I'm pleased to see that in this report we've got some actual examples of where we've done some shareholder activism. I'd like to see more of that and get hands along, you know, the entirety of what we're doing. Thanks.
Thank you. Officers, you got any comments?
Yes, thank you, Chair. Yeah, I mean, we're members of LAPFI, and so are the Access Pool. And so what LAPFI do is they leverage the total of value of assets within either the pools or within the individual funds, and can engage on any, you know, with any company, and they can vote in respect of any, you know, any of those companies as well. So they certainly are. It's collaborative shareholder action is the way I would obviously describe that. In terms of, you know, an individual fund, we obviously engage with our managers through both Access and through individual meetings to discuss topical issues. But Access as a whole obviously expects those managers to vote in line with the voting guidelines that Access produce, but then engage almost thematically in a similar way. But what I wanted to say, which I think is quite important, is the other thing we are looking to or exploring at the moment within Access. And I think this is quite public knowledge, that the one thing Access doesn't have is a voting engagement provider. So that whilst we have voting guidelines, we don't have effectively a single provider giving consistent, well, engagement across the piece, and actually voting precisely in line with the guidelines as well. And so that's something we're exploring at the moment, and the group I chair within Access is actively looking at that at the moment. So that would bring in a really consistent level of engagement along themes that we would obviously decide what they are. So that's the really important piece as well. If there are particular areas and themes that we want to engage on, then they can be engaged on behalf of every single asset that's held within the asset pool. So that's just a bit of colour, and that's one of the reasons that you see that LAPF are really, really active in this space. It's because that's what they do. They are working on behalf of funds, on behalf of pools to engage for us.
Yeah, thanks, through you, Chair. I mean, I'm looking at the Starbucks thing, and it says that the shareholder proposal passed with 52%. I mean, it looks clear that local government pension schemes must have been absolutely crucial in a very large company getting a result that they didn't expect at their meeting, and as a result, they are engaging with union recognition, and that is the sort of thing we'd like to see.
Michael.
Through you, Chair, just on the last point, we don't yet have any understanding of the parliamentary timetable up to its dissolution on the 30th. There's obviously a number of competing strands of legislation to get through for that. But what we'll do is we'll commit, once we are aware, we'll update the committee via email and via the democratic services.
Thank you for that. Members, any other questions? Issues? Okay, thank you. Well, we're being asked to note this report. Are we happy to do so? Yep, thank you very much. Right, we'll move on to item 6, which is the Cambridgeshire Pension Fund monitoring report for the quarter ended 31st of March 2024. Can I ask Chris West from Mercer to introduce the report?
Thank you, Chair. So I'll focus on 2 slides from in the public session just to provide a high-level update on total fund performance and the key drivers and the market backdrop. And then in private session, we can move into a slightly more granular deep dive into mandate performance.
Can you just bring the mic slightly closer to you? Sorry.
Is that better? Okay, perfect. So starting with slide 29 of the meeting packs, which is slide 4 if you're following the paper copies in front of you. And this provides the market backdrop and market index performance over Q1. It was a quarter of positive returns for growth assets, so equity markets and those riskier growth fixed income or bond assets. And that was driven by investor confidence built on, firstly, stronger than expected US growth data in Q4, and also positive hopes for artificial intelligence or AI to drive productivity and corporate profitability. And so in particular, within equity market returns, we saw the tech sector and communications sectors do particularly well. And also worth noting that developed markets also outperformed emerging markets over Q1. We also saw over the quarter returns for more defensive bonds were flat or slightly negative. That was driven by inflation remaining stubborn and higher than had been expected at the start of the year, and delayed central bank action in around the pace and timing of interest rate cuts. So going into 2024, markets had expected those rate cuts to happen earlier and for multiple rate cuts throughout the year, whereas sentiment from central banks through their meetings earlier in the quarter really started to push those expectations out to later in the year. Given we have currency hedging on the agenda later as well, the difference between the blue and the green bars is relatively small, and that implies that actually sterling and sterling relative to overseas currencies, the impact was relatively muted during the quarter. So skipping back a page to the executive dashboard, what does that all mean for the fund over the quarter? On the top left quadrant, so it was a positive quarter from a funding perspective. Liabilities were broadly stable, and the fund saw strong asset growth, given the supportive environment for growth assets and for equities in particular. Asset allocation on the top right, so we saw continued implementation of the strategy that was agreed in 2023. In particular, a number of sales were implemented from equity assets from the equity portfolio to fund an increase in property and the new Aviva Lime fund over the quarter. However, given those strong equity returns, that did help maintain that overweight equity position. So equities remained overweight at quarter end. There were further sales from equities in early Q2, and so that position will continue to be addressed over this quarter that we're currently in. Performance on the bottom left, so absolute returns were positive and 5% positive return over the quarter. And relative to the fairly challenging benchmark, the fund was slightly behind over Q1. The equity and fixed income portfolios in relative terms did outperform their benchmarks, and within equities we saw strong performance from JO Hambro as one of the key drivers in Q1. The market environment did support their investment style more than other investment styles. And that more than offset Dodge and Cox, who follow a value style of equity investing, so more defensive sector exposure typically, who underperformed and detracted. The key detractor was the alternatives portfolio, so that acted as a drag on the benchmark return over Q1, and that position is more pronounced over the 1 year period, so we saw more significant underperformance over the 1 year. Key drivers there were the slowdown in UK property, so it's been a tough year for UK property markets across core property, across residential property, and that comes through. And also private equity, it's been a slower year for private equity following a period of over a number of years prior that was relatively strong. Research developments, it's redacted in the report here, but just worth noting that there are no developments of note to bring out in the report. So perhaps I'll pause now for any comments or questions on the public report.
Members, any questions? Any issues you wish to raise on the public section of this report? No? Okay, Chris, have you got anything else to add on the public section of this report?
No, Chair.
Okay, members, in which case we're being asked to note the public section of this report. Are we happy to do so? Thank you. In which case the following items on the agenda are exempt from publication, so the committee will need to decide whether to exclude the public and press from consideration of the following items on the grounds that the report contains exempt information under paragraph 3 of part 1 of Schedule 12A of the Local Government Act 1972 as amended, and it would not be in the public interest for this information to be disclosed information relating to the financial or business affairs of any particular person, including the authority holding that information. May I ask if there is general consensus in support of the recommendation? And if so, we will move into private session. All right,